The lesson today will be screeners. We're going to go over the screener and different ways to find these picks down here, right? We're going to find these picks. See this down here? Screener. So we have more green days than we have red days. That's one way of doing the RSI is add up the red days, add up the green days. Who's the biggest? That's pretty easy. You can just say, well, here's your green days right here, right? All these up here. That's all your green days. And I'm going to get rid of this breakout area because that was what we were looking for. Add up your green days versus, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So if you add up all your green days for the last 14 days, what that means is all these, that whole area, those all the greens, and you got all these. You stack those two together, which would probably look like this, right? And then you subtract or you add on top the red days. What do you get? You got this and this. Guess who's bigger? The green days. So how much bigger? What percent of that total move if you add them together? Well, that would be the RSI, and we'll go look at that. Or you can simply come over here and say, what is the RSI of the market? And we got 59, almost 60. So on the range, we're at 60, definitely bullish. So there's a lot of things that are saying bullish in the market. At regular candles, this is what we look like here. It's a slight gap up from the open. Is it a breakout? Yes or no? So there's only two setups. There's only two setups that most traders look at. You have what's a swing low or a breakout. Now, breakouts are dead giveaways because they're usually horizontal resistance. Breakdowns are horizontal support. So to get a horizontal, you need at least 2 points. To get a line, you need 2 points. So this isn't horizontal, but this would be a breakdown of the triangle, breakdown of the channel. So breakouts are usually, most of the time, referred to as horizontal breakouts or vertical, like horizontal or channel breakouts. Like if this was a channel here, you know, oh, it's breaking out of a channel. So breakouts, the trigger is where? Right above that point, right above that point. And where is it exactly? I like it a good, like here's the wick right here. They almost line up, right? And you don't always get a perfect horizontal, but you can say, well, I'm going to say right about there. Almost there, right? So almost a breakout, and that's where we're facing. So we're closer to a breakout, but we did trigger a swing. See the swing that bounced off the moving average? And usually a good swing is when it pulls back to the 20, and this is the confirmation above that candle right here. So on Heikin-Ashi, it's really easy because it stays green. You get a doji. The confirmation is above the doji. You only put triggers on dojis, period. And if you have a doji, where do you put the trigger? Do you put it on a buy or do you put it on a sell? Well, if it's above the 20, you put it above because you go with the trend. There's more trending days up than down. If it's below, so even on this doji here, you would still put the trigger above. You still put it above, and it didn't trigger, okay? Trigger above. And this is what we're looking for, that expansion candles. So what's interesting about this is we're looking at the S&P. It's considered the benchmark. Now, before we hammer through all of our picks, we have the S&P as bullish already. We have the Dow as bullish. The Qs as nothing, meaning no trend. We couldn't read it. IWM was critical. So I want to jump to IWM real quick. But looking at that, would you say we're still bullish? Yeah, I think we are. What do you guys think? MACD. So looking at just the Heikin-Ashi, if you're brand new, green candle above the 10 to 20. Green candle above the 20. Right? And if it's above the 10, that's always bullish. That's if the 10's above the 22. So when you have the 10 expanding like this and the stock's up here, you just leave it alone. Just leave it alone. It's bullish. It's doing everything you want to do if you're a bull. Do you guys see this, dude? Do you guys see this right here? Do we have a weird cup and handle or a W? Inverted head and shoulder? We got a breakout set up. Is there any good news coming out tomorrow? Earnings, that kind of stuff, right? And the MACD's confirming it. Now, that's the daily MACD. And what's more important than the daily is the weekly. If I go to the weekly, I'm going to click 3 years here. You'll see it changes to weekly up here. See the W? The weekly MACD is still bullish. See that? And we have like these little dash lines. You'll see this is on the 20. I need to adjust this over here because you can see I like to put this on the 20 just to show like this is still considered bullish. And the MACD is losing steam here on the weekly. I wanted to point that out, but if we get a breakout here, and by the way, we're 3 days old this week. We're only 2.5 days actually. We're halfway through the week. Wednesday, hump day, right? This will expand. But we need a decent breakout for this to expand. See how it's losing momentum here? So as longer it takes to make a new high, this will start gravitating. But this is not going to move until next week because we're already doing this week. We didn't need some we need a lot of movement the next 2.5 days to get this to move down here. So everything's confirming stay bullish. So what I want to point out is the MACD on the weekly. Why is it? Because it's slower and it's using these moving averages. And there's a very strong support called the 20 on the weekly. When that weekly 20 breaks, you get some sell-offs. See, as soon as we lost support, look at the expansion. When you get an expansion candle on the weekly to the downside, that usually means, yeah, the bear's triggered, right? We get this. And then we get back above the 20, look at the expansion candle above it. And then we broke out of this area. So you'll start noticing little nuances like that. Like, oh, okay. For example, let's look back. That was this. See how he broke out of the 20 expansion? Used the 20, just like we used it back here and here. And it tested it. Look at the expansion candle. See, look at the expansion. Doji, look at the expansion candle above it, right? Slowly melting below. We're pinched also. MACD reset is a very similar technology. You see that? Very similar. But real quickly while I'm here, technology driven by semis, very similar. That's most of the movement there. I like to drop down here and look at the other half of, I call it the other half of technology, software. Big difference. Software. Start expansion, green candle, little. Do you see the difference between software? Do you like that setup? We're triggering right now on the Doge. Or do you like semiconductors? So real quickly, semiconductors software. You see the industry rotation there? And they're the big part of who? They make up technology, which is so you see how important it is to be in the right industry? Industry is more important than the sector. So if you scan for technology, what kind of stocks do you want to take? Do you want to take software for bulls? Or do you want to take semiconductors? You want to be in software. That's where the money's flowing. Big difference, right? Now, if you compare the two, it's a huge difference in percentage-wise. Let's go back to the last high right there. right there. See that? In fact, let's do it this way. And this is also great for pairs trading. You guys know what pairs trading is? You short one and go long the other. Notice this. They peak and valley. Let me hide this. They peak and valley almost exactly, right? So when you also look at it, is one more volatile than the other? And to see that, you got to go back to like a high of a trend and just kind of say, well, when it's bullish, is one more bullish? And when it's bearish, is one more bearish? I bet it's a little more volatile. You see that? Let me zoom. Whose makes the more drastic? Okay, for example, this bull trend, who made the biggest move? This range right here was a bigger move. The bear trend, who made the biggest move? This range. So you see how it's more volatile? It covers more ground. Which one? The line. Therefore, if Ethereum goes bullish, what do you think is going to happen here? The one with the bigger beta. Beta. Now, what is beta? Beta is based on historical volatility. If the S&P goes up, let's say 1%, what does this stock go up? 1%. That would be a beta of 1 over 1. If this stock goes up 1.8, it would be a beta of 0.8. It's got how much more movement does this one do? So this one has a higher beta just by looking at history than Ethereum. Does that make sense? And this is to answer your question, Gerald, also. It's going to put it as a filter. Like I have an RSI greater than 50 because I want it to be bullish. I can also say neutral, right? I can say overbought, oversold, bearish. I can say crossed. But when I put the RSI as a filter, as soon as you do that, it's going to put it as a column. Now, some columns are going to be there no matter what. And if you don't, now let's say you don't have this as a filter and you want to see the RSI, check this out. You come over here to these little bars. These are your columns. In your columns, you could say, well, I want to see the sector RSI or the daily RSI. And you can even see the weekly RSI. And you can see the sector weekly RSI. So for example, I can go in and say, I want that column. Even though I'm not using that filter, I want that column. I want that column. And yes, in here, I can say, okay, I'm looking for bull stocks. I like to sort, now this is me, on the daily moving average 20. Why? Because when it's on the 20 right here, let me move this up so you can see it. That's too far, 8%. It's already bounced off the 20. This one's touching the 20. It's 0.3. It's in healthcare. So healthcare, now Gerald, check this out. Yeah, relative strength index is different than relative strength. Now this is the RSI of the individual stock and the RSI of the individual company, where we add up the last 14 candles. So right here, the daily RSI for BMY is 54. The sector is 55. The weekly RSI is 54. The sector is 59. Gilead, on the other hand, and Gilead, actually love it. Love it right here. Check this out. Changing trend, expanding candle through the 20. got through the cluster moving averages as in using it. It is now a solid floor. And check this out. Very good target 1. Target 2, really good. So it's easier to get a home run on this one. And it's Gilead, $130 stock. What kind of option? So your target. So the nice thing about options is a target like this right here will double your money on a long call. The cost of your long call on a 1-to-1 will give you a better return than the stock, of course. Could you do stock? Yeah. And Gilead, I thought Gilead was. It's drug manufacturers. I thought it was. Oh, it is part of the biotech ETF. It is right here. Both biotechs. So it's drug manufacturers, and BBH is a biotech ETF, and so is IBB. BBH pulling back, and IBB, so different makeups of the same. So they're better set up than actual healthcare.